So I'm really excited tonight because this has been a long time coming, and he's been with us step by step for everything. And I got to tell you, Mr. Watson here is the attorney you want to talk to. He is a prosecuting attorney, and he has had hundreds and hundreds of cases. I'm going to let him give you his background because it is just phenomenal. But to have him here, it was worth flying him in to have this done. He's going to cover for you what fines do you need to pay? What do you have to sign up for? What is this transparency for LLCs? There's nobody better to talk to and let you know what's going on with the lawsuit, what you should do, when you should do it. Let me introduce to you Attorney Jeff Watson.
Anna, thank you, thank you, thank you. All right, thank you everyone for being here. Let's just kind of like get comfy in our seats. I will do my best to wrap this up in about 89 minutes. All right, 89 minutes. And let me give you a reason that I'm going to do that. I've already done my research. Between now and tomorrow morning when I get on a flight to go to Dallas and do the same presentation, I want to hit a Chick-fil-A, and there's one that's nearby that's open till 10 o'clock. So we've got to, because I haven't had dinner yet, folks, so we're going to get after this thing. So if you don't know anything about me, I just got to ask, how many of you have never heard me speak before? All right. So I'm not woke, I'm not PC, I'm bipartisan, I call it like it is. I will do my best to offend everybody. Okay? I just call it like it is. I'm a huge fan of Chick-fil-A. I have the app on my phone, and my goal is to get 250,000 points from Chick-fil-A. To go with the 1,000,000 miles I've done on Southwest Airlines, to go with the 1,000,000 miles I've done in United Airlines, to go with the couple million points I've racked up in Marriott's. So anyhow, yeah, I know. All right, so let's get into this. Who am I? My name's Jeff Watson. I've been admitted to the Ohio Bar for now 33 years. I have spent more of my life as a practicing attorney than not. That's kind of intimidating. I've been a real estate investor for over 30 years. I'm only a part-time real estate investor because I'm a full-time practicing attorney. And I have had the opportunity to represent companies like RealFlow, National RIA, which is the parent of this organization, Note School, where I'm speaking tomorrow, and National Wealth Builders out of Dayton, Ohio. And I've got a new client called Direct Source Wealth, Puerto Rican corporation with the Delaware LLC, and about 2,000 doors under ownership across multiple states in this country. All right, so sir, hang up the phone. Just hang up the phone. All right? Step on out or hang up the phone. You're rude to everybody else. I'm sorry to be mean, but you're rude to everybody else. I don't care if you talk on the phone, but I don't want everybody else to hear it. All right, accomplishments. Changed the law in the state of Ohio 5 times. 4 times through litigation, 1 time through legislation. That last one meaningful to everyone here because there were a bunch of fair housing organizations doing the gotcha on the emotional support animals, and we broke their rice bowl. National RIA, I've changed national housing policy 3 times. The first time I did it was self-preservation when they came after me saying a methodology I was teaching was not legal, and I did otherwise. I showed them it was legal. And so now we have deed restriction language that is actually usable with Freddie Mac and Fannie Mae. I've co-authored an amendment currently pending in Congress that's going to change Dodd-Frank, the SAFE Act, and Truth in Lending regarding seller financing. 2008, revolutionized short sale transactions. Member of the board of directors of Quest Trust Company out of Houston, Texas. And 2 REI clients that have made the Inc. 500 list, the Inc. 500, not the Inc. 5000. I own one of those companies, co-own it. We made it in 2011. I've got 1 client that did it 2 years in a row. So, let me give you the lowdown. Tonight's presentation is designed to provide authoritative and accurate information with regard to the subject matter being covered. This is education and not legal advice. It is provided with the understanding that the presenter is not engaged in rendering legal, accounting, or other professional advice. If legal or other professional assistance is required, the services of a competent professional must be acquired. All right, I do an email newsletter. How many of you read my email newsletter? I know some of you do because I've already been asked about it this evening. So if you want that email newsletter, it's free, so it means it's going to be worth exactly what you pay for it. You can scan that QR code and sign up for it at watsoninvested.com, watsoninvested.com. Now, let's get down to it. Pardon me? That's because you're not close enough. That's because of the screen's a little too blurry. Yep. Let me guess, you have an Android? Yes. iPhone has a good camera, and that's about all it has. Shots fired. Yes, I've fired some shots this evening, haven't I? All right. Okay, so let's talk about what is the Corporate Transparency Act. Just out of curiosity, have you heard about it yet? Aside from this organization telling you about it, have you heard anybody else telling you about it? Glenn Beck. Okay. All right. So what is the Corporate Transparency Act? Well, it aims to ensure that reporting companies identify all individuals with substantial control, those who control or own at least 25% of the ownership interest in their beneficial ownership interest report. Now that's like, Jeff, that's pretty dense. Can you please break this down? I'm glad you asked. So, as note or real estate investors and operators, we need to know which of your entities are considered reporting companies under the Corporate Transparency Act. So how many of you have an LLC? How many of you have more than one LLC? How many of you have 5 or more LLCs? Okay, not so bad. How many of you have a corporation? How many of you have ever done a partnership? How many of you have ever done a joint venture? How many of you have everything you've ever done is either in your own individual name or in a grantor revocable title holding trust? Everything you've ever done is in your own name or it's all in a trust. Okay. Those of you who you've only done it in your own name, you have no companies whatsoever, or you've used a trust that you own, you formed, you control, you own and operate, and you and family members are the beneficiaries, y'all can breathe a sigh of relief because you're the only ones that this doesn't apply to. Oh, but you have absolutely no liability protection under any of the laws of this country. So if you get sued, break out your checkbook. Break out your checkbook. Oh, but Jeff, I've got one of these special magical trusts that... No, you don't. No, you don't. You can't have it both ways. You either have a trust that has to report into the CTA or you have no protection. Which do you want it to be? Okay? So let's get into this. You have to understand who the beneficial owners are and disclose the information that is required. We're going to talk about all of this in painful, ugly detail. And then you have to timely file your disclosures online with the Financial Crimes Enforcement Network. Just that idea alone, that I, as a law-abiding, bill-paying, tax-paying, housing-providing citizen, have to go register on a website designed to prevent financial crimes, I think is offensive. Because it's telling me I'm a criminal. At least that's what I think it means. And oh, by the way, if you don't comply, you are a felon. Because if you do not comply with this law, not only can you be convicted of a felony and do up to 5 years in prison, but you can get hit with a fine of $500 a day until it hits like $10,000 per entity. So it can be pretty expensive. Now, adding to the confusion that already exists regarding the Corporate Transparency Act, a United States District Court in northern Alabama recently ruled that the Corporate Transparency Act is unconstitutional. Yet most companies still need to comply, and here's why. That Alabama case only affects your obligation to file under the Corporate Transparency Act if you were a member of the group that filed suit. And if that suit was brought by the National Small Business Association and one Mr. Isaac Winkles, a member of the National Small Business Association. Anybody in the room a member of the National Small Business Association? It's predominantly for sub-S corporations. So if you were a member of that corporation on March 1st of this year, congratulations. You don't have to comply with the Corporate Transparency Act. But if you try to join it after that, you still have to comply. So it's not so fair. FinCEN has since announced that it won't enforce the Corporate Transparency Act on the plaintiffs of that case, but all other businesses must still comply. Wait a second. Some dude wrote a book about that. I think it was called Animal Farm. All animals are equal, but some are more equal? All businesses are equal, but some businesses are more equal? So if you belong to this one organization that had the chutzpah, the guts, and the brains to challenge us, you're okay. But if you haven't challenged us, you're not okay. Wow. I guess we don't live in a constitutional republic anymore. Okay. Anyhow, moving on. Any business that joins the National Small Business Association after March 1st is still required to file with the Corporate Transparency Act. Okay, I expect to see a few other cases reach this, with ultimately the Supreme Court of the United States ruling in on the CTA, but I do not know when that is. So I'm going to give you advice as if it has not going to happen and will not happen in time. So I'm going to give you some recommendations. So, first off, if you formed a new company in 2024, do not wait to see what happens with this. Instead, go ahead and file within your required 90-day window. How many of you have formed an LLC this year? I have. I've formed several. You have 90 days from when the Secretary of State's office says you're good to do business to go onto the FinCEN website and file and register that company and give up all sorts of personal information. You got 90 days. All right? I got to get a bunch of stuff done by the end of this month. All right, so I just look at it as the zombie vampire is back from the dead. I thought this thing was dead. I thought the CTA was gone for about 7 days, the beginning of March. But nope, it's back. So when it comes to reporting in 2024, because that's the year we're in now, timing is everything. How many have heard the phrase before, timing is everything? Okay, so timing is everything, so please pay attention. There are two groups that apply to this. And the more I explain this, the more discriminatory this whole thing sounds, okay? The first is for an existing entity. So for an entity that existed as of December 31st of 2023, it existed any time before then and is still viable, do not register that entity for at least the first 9 months of this year. I want to just see how the road goes. Maybe this thing will get thrown away. We'll see. For an entity for an entity created this year in 2024, you got 90 days. You got 90 days or you run afoul, okay? You run afoul of the law. Now you're going to say, well, Jeff, why do you want us to wait at least 9 months? I already gave you a sneak peek when I let you see the next slide. How many of you ever watched Nat Geo? Just, Discovery Channel, National Geographic, anything like that? You ever watched the video documentaries on the great wildebeest migration across the plains of the Serengeti? You've seen that, right? Massive herds of wildebeest. And they go across, and then they come up against these rivers. And they got to cross the river. And it seems pretty good, right? They're thirsty, they get a chance to drink the water. But what's the problem with the river? Crocodiles, alligators, animals that will eat them. Okay? So, what happens to the first wildebeest that go into the water? They can be eaten. What happens to the stragglers? They can be eaten. What happens to the wildebeest in the middle of the pack? It's kind of safe. It's kind of why they herd together as a defensive mechanism. So don't be the first, Don't be the last, be in the middle of the herd, okay? Also, by waiting, it's going to give them time to continue to get all of the bugs out of their system. How many of you remember when the healthcare.gov website went live and crashed seconds later? Well, this website went live and did not crash seconds later, but we've had a few quirks with it, but they seem to be working it out. All right, so this is why we're waiting. So we do not want you to have this, sorry, we're having technical difficulties. Now, let me give you some statistics. Those of you that like to take notes, please take care of this. There are 365 days in 2020, there are 366 days in 2024. There are 35 million companies that they anticipate need to register on this website this year. So let's take 35 million and divide it by 366. What does that come out to? Hundreds of thousands per day, and that means the computers may, the websites may crash, particularly if you're like I am. Have anybody else here procrastinate? Procrastinate, you know? Just out of curiosity, how many of you have already filed your tax returns for this year? And the rest of you are strategically procrastinating? Strategically procrastinating, right? So it's the same thing here. We're waiting, and so it's just like I've seen the IRS website bogged down on October 15th at 11:35 p.m. when we're trying to file my tax return. Why? Because it's getting inundated with everybody else. So you can imagine between Christmas and New Year's, when tech support is on vacation, everybody's trying to file, website goes poof, and we got a problem. So we don't want to be doing this. Now, the database that is being collected by FinCEN, Financial Crimes Enforcement Network, is purportedly not public and is only available to law enforcement with a subpoena issued by a court. To which I say, yeah, right. So the moment it's up there, I think the Bulgarians, the Russians, the Romanians, the North Koreans, the Chinese, and the kids with their hacker computers in the basement are going to have the data. So, what does that mean? That means if you put it out there, it's going to get taken from you. So, what I would suggest that you do is you have a choice. You can say, listen, I'm not going to comply. I'm just going to take the risk of being a felon. I'm going to take the fine and the felon. Okay, that's fine. Or you can be like me and go, well, I don't want to lose my law license. I don't want to go to jail. I don't want to pay a fine. But I don't want my identity stolen. What am I going to do? Oh, I think I'm going to buy ID theft insurance. Not credit monitoring, but I'm going to get some ID theft insurance. I'm not here to sell it, so I'm not even going to tell you the names of the companies that are out there. So I would recommend you go get some ID theft insurance, and then I would recommend you understand who must report. So owners of 25% or more of entities with $1,000 or more of assets. So let's talk about the things that are up on the slide. How many of you own an LLC? How many of you own the LLC all by yourself? How many of you have a bank account for that LLC? How many have more than $1,000 in the bank? How many of you have a contract in the name of that LLC to buy a property? It has $1,000 or more of assets. Does it have a bank account? Does it own anything? Does it ever appear does it have a house in its name? Any of these things, it needs to report. Now, if you own 25% or more, you need to report. So, okay, Jeff, we're going to outsmart this thing. We're going to have 5 of us each own every LLC, so no one owns 25% or more. We all own 20%. We're good to go, right? Nope, because they were thinking of that. They were thinking of that. So we'll get into that. Those who have substantial control over an entity with $1,000 or more of assets. So those 5 guys that thought they outsmarted the system by each owning 20%, 5 times 20 is 100, but the LLC owns a bunch of houses. Who has substantial control? Can you imagine you a group of control freaks, giving up control to the other 4 people? No. You're going to have the ability to say, well, what we do with the stuff. So you've got substantial control. So you have to report. So if you own 25% or more, or if you have substantial control, you have to report. Yeah, and here's the part that you're going to absolutely love. I'm being sarcastic. You do not report what is owned by the entity, because the IRS already has that. Instead, you report who owns the entity. Who are the owners? Who are the operators? Who are the people that make the decisions that move the money around? Because you know what? You people with LLCs, you do money laundering, you do drug trade, you do human trafficking, you rob, you steal, you cheat on your taxes, and we got to catch you. I just, this is the thing that gets me, is the government does not trust us except they want our money. I want to know everything about you, and I want all your money. All right? So, I'm going to tell you, prepare for ID theft, buy ID theft insurance. I'm not going to give you the names of any companies because I don't want to be accused of selling something. So anyhow, let's get into the definitions because we got to this. Ownership interest is very broadly defined under the Corporate Transparency Act and encompasses various instruments, including but not limited to equity of 25% or more, whether you've issued a certificate of membership or not, interest in a joint venture. Do you have 25% or more interest in a joint venture? Do you have a convertible instrument, i.e. you made a loan, but you can convert that loan, sometimes we call those warrants, to where you can then have an ownership stake in the company? Will that ownership stake be 25% or more? Will it give you substantial control? Then you need to report based upon the fact you're even a lender, but you hold a convertible instrument. How about trusts? You see, if you own it in the name of a trust and you own the trust, it just ignores the trust and looks right at you. And then equity pledges. How many of you even know what an equity pledge is? That's where people will pledge the equity of a company, either the shares of stock or the membership interest of an LLC, as collateral for a loan. If you use an equity pledge, and that equity pledge agreement gives that lender the right to control the company or step in and control the company, you have an owner, you have 25% or more control, or substantial control, you've got to step in. We're going to get questions at the end. So an individual may own or control ownership interests through various means or methods, such as trusts, beneficiaries, grantors, intermediaries, nominees, etc., and etc. Any creative way that you can come up with, including but not limited to bearer shares of a corporation, are covered by this act. I spent 3 days reading it trying to find a loophole. I couldn't find one. It was rather frustrating. Okay, keep going. Now, substantial control. Oh, this gets even better. Even better. Substantial control. An individual is deemed to exercise substantial control if they serve as a senior officer of the reporting company, have authority over senior officer appointments or the majority of the board of directors, if they influence important decisions, including those related to business operations, asset transactions, equity issuance, debts, contracts, and governance documents. Now, do you see a word that just jumps out at you on that slide? Influence, exactly. Ladies, how many of you can influence your husband? Some of you are shaking your head. Some of you are just hiding it. Okay? Influence important decisions. Yeah. So if he or she tells their significant other how to run the company or influences how they run the company, they have substantial control. Not a fun day. It's overly vague. Why is it overly vague? Because they want to catch you. They want to include you. They want to throw out the biggest all-inclusive dragnet possible to pull you in and say, you've got to obey. Now, the Corporate Transparency Act looks right through these structures. This is a very typical asset protection structure taught by hundreds of people throughout the United States on how to hold their rental properties. They put the property into a trust. The trust is owned by an LLC. The little LLCs are owned by the big LLC. The big LLC is owned by 2 or more people, husband and wife, 2 people who are partners, whatever it is. Okay? Parent and adult child, etc. That, the corporate transparency looks right through all of that and says, we want to know. And so here's a different way of describing the same structure. And the CTA says, we don't care about the trusts. We want to know who owns all of those LLCs. We want to know who owns each and every one of those LLCs, and we want to know who has substantial control over them. How many of you are happy right now? How many of you are like just uncomfortable? Good. Good. Because I'm not here to make you feel good. I'm here to just tell you the truth and let the chips fall where they may. Beneficial owner means with respect to an entity, an individual who directly or indirectly, through any contract, arrangement, understanding, relationship, or otherwise, exercises substantial control over the entity or owns or controls not less than 25% of the ownership interest of the entity. Do you see how vague and broad that is? Means an individual who directly or indirectly, through any contract, arrangement, understanding, relationship, or otherwise, if you've got the ability to influence how a company that owns $1,000 or more runs and does business, you need to report as being either having substantial control or being an beneficial owner or both. It does not include a minor child or an individual acting as a nominee, intermediary, custodian, or agent on behalf of another individual. This is my part because this is an area where I really focus my practice. How many of you have what we would call euphemistically checkbook control over your IRA? You have a LLC owned by your IRA. Got one hand in the back. Your custodian or administrator does not have to report. You do as the account holder. Okay? Why? Because you're the one that tells the custodian what to do. All right? So it doesn't matter if you've got an intermediary, a cutout, a dummy, a doppelganger, whatever it is, you still, because whoever makes the decisions, they're the ones who have to report. Now, it does not include an individual acting solely as an employee of a corporation, LLC, or a similar entity whose control over the economic benefits from such entity are derived solely from the employment status of the person. So you get a paycheck, and that's all you get. You don't own the company, you don't have an ownership stake, you don't have profit sharing, you just get a paycheck for doing your job, and your job is to do things on behalf of the company. You don't have to report because you don't have substantial control. Because somebody else is telling you what to do, they can hire you and fire you. And it does not include anybody who has yet to inherit a company. So I own some LLCs, and if I pass away tonight, my kids would have to report within 90 days. But for as long as I'm alive and breathing, they don't have to because they don't own the company yet. But once I pass, then they do. Their clock starts ticking. And a creditor, it does not apply to a creditor of a corporation or LLC or similar entity unless the creditor meets the requirements of subparagraph A, and that goes right back to, are you using the debt as a way of controlling the company? Do you, as the lien holder, have the ability to throw the company into bankruptcy or insolvency and step in and take over the company? If so, then you need to report. Now, it's important to note that these exemptions are not absolute, and some of them may cease to apply under certain circumstances. Yeah, that's right. They may take away some of those narrow exemptions. For existing entities, the final rule requires that reporting of those companies that exist at the time of the effective date, so they existed before 1/1/24, they existed by 12/31/23, to submit an initial report within 1 year of the effective date. Do not wait until December to do this. Do not wait till Christmas. Do not wait till Hanukkah. Do not wait till New Year's Eve to do this. Get this done in October or November. Get it done before Thanksgiving. The statute establishes a maximum time period of not later than 2 years, but the bureaucrats at FinCEN decided that they wanted a deadline shorter than 2 years. They wanted it to be 1 year. For newly created entities, i.e. entities, corporations, LLCs, joint ventures, partnerships, anything formed in 2024 that requires an application with a government authority to bring itself into existence, Secretary of State, tribal authority, clerk of courts, etc., you have 90 days to file your initial report. That trigger date is it begins 90 days from the date on which the reporting company receives actual notice that its creation or registration has become effective. Now, here in the state of Ohio, we have a really well-run Secretary of State's office. I don't know if you know this or not, but compared to a bunch of other states, Ohio's LLC and Secretary of State's office is dang good. Fast, efficient, and affordable. And even better than that, you don't have to list who owns the LLC. Now, oh, but wait, Jeff, wait, there's gurus telling me that Nevada and Wyoming and maybe Delaware are the only places I should ever file. Wrong. Nevada, Delaware, and Wyoming, they all want to collect the names of all the owners. Ohio doesn't. Oh, but Jeff, their LLC law is better than ours. No, it isn't. It's the same stuff. Go read the statute. Don't pay the expensive stuff on these hype sales pitches. So in Ohio, we file an LLC, and we can sometimes see it approved the same day or the next day. That means that clock starts ticking that day when it gets approved. I filed a bunch of stuff in early February. So I got February, March, and April, and I got to get it done. And I'm probably right on my 90-day button, okay? It no longer requires, okay, FinCEN does not require domestic reporting companies. What's a domestic reporting company? It's an entity formed in the United States, created prior to 1/1/24 to submit company applicant information. Let me explain what this means. This is where they've bifurcated and treated us as in two separate classes. More discrimination. If you had an entity that was created in 23 or sooner, you don't have to report who helped you form the company. If you create an entity in 24 and thereafter, the person who created the company, who filed the paperwork with the Secretary of State, they have to disclose their information as well. So not just who owns it, who has control of it, but who helped you form it. Because they're looking for frequent flyers that abuse the process. Like I said, I'll get questions at the end. Now, this is substantially changing my law practice, because I have people that say, Jeff, I want to hire you to form an LLC. I'm great. Here's what it is. It's now more expensive. It takes more time. And oh, by the way, until I get usable color copies, digital, of your passport or your driver's license that show your current correct home address, and I get these other things answered, I'm not doing a thing, because I know how you are. You give me just enough to get it done, and then you're going to make me wait until white-knuckling it at the very last minute. Then you'll send me a real crappy color copy of your driver's license and expect me to work a miracle. Ain't doing it. Not doing it. Not doing it. Okay. Those reporting companies will only need to report the fact they were created prior to 12/31/23. And the information required for the companies will just be the reporting companies and the beneficial owners in control. Companies created in 24 have got to say who also helped file them. Now, here's the big gotcha. Here's the other big ugly gotcha. Most people don't talk about this. Businesses and owners are not required to file annually, but they must refile within 30 days of any change in the information related to the ownership or individual or company details, including a change of address. So, you change the address on your LLC because you move from Toledo to Findlay. Guess what? You got 30 days. And on day 31, you have now broken the law. Does that excite you? I don't know how you remember it. I don't even know how. This is the biggest gotcha I've seen out there in a long time because most Americans have no clue about this law. Here we are in the middle of May. The year's going to be half over real soon. Most people have no clue. For a reporting company with a principal place in the United States, the reporting company should provide full name of the owner, full name, not just initials, physical street address of the principal place of business, physical, not P.O. box, not mailboxes, etc., not the UPS store, not the nook under the freeway underpass. I know how you people think, okay? I am one of you. I know how you are. You're always looking for some sort of loophole, okay? The physical street address so the SWAT team knows where to show up, okay? That was a joke. Copy of government-issued ID, driver's license, passport. Please make sure it's up to date. Please do not try and do this with an expired passport or driver's license. Okay? Please. And reporting companies will not be allowed to report using either a DUNS number or an LEI number in lieu of a TIN. How many of you know what a TIN is? It's the same thing as an EIN. Taxpayer identification number or employee or employer identification number. You've got to have that. So, they give us 90 days because they think it might take a couple extra days to get a taxpayer identification number. Because FinCEN is extending the time for filing of the initial report to 90 days instead of 30, which is what they originally wanted, FinCEN expects that reporting companies will have sufficient time to obtain the taxpayer identification number before filing. So I'm going to tell you the one piece of information they don't want from you. You want to know what it is? They don't want your Social Security number because the IRS already has it. So I want you to think about this. How many of you have ever heard the term of big data? How many of you know that there's a profession out there now called data analytics and data engineers, correct? And now we have this thing called artificial intelligence. So imagine what happens when the government can take your credit bureau, your credit card statements, your bank statements, your tax returns, and your FinCEN refilings, and mush it all together. And they go, wait a second. Fred and Wilma Flintstone, they report an income of $125,000 a year, but they got a lifestyle that looks like $300,000 a year. We know they don't have a bunch of debt. We can tell that they spend money on their credit card, but they pay it off with money orders. What's going on? We want to go audit them. We think that they're underreporting their income. Or somebody now buys an expensive watch of $25,000, shows up on your credit card bill, but it's inconsistent with the rest of your income. They're going to come looking. Do you begin to see why they're trying to also push us to a digital currency? Control, control, control. I don't see anybody really happy here tonight. Yes, it is. I take responsibility. I take responsibility. All right? So, the final rule revises the provision that provides additional clarity. Business address is required for the company applicant. That means when I form an LLC for clients, I have to put in my business address as well. Not my post office box, but my physical street address so the SWAT team can roll up and look through my files. So, going forward, less is going to be more. Fewer entities involved and fewer corporations in order to reduce the risk of non-compliance. So let me tell you what I want you to do right now. Step 1, on your list of to-do, select identity theft insurance provider. Step 2, buy identity theft insurance. Step 3, list all, repeat, all companies, LLCs, corporations, joint ventures, partnerships, anything that's got a taxpayer identification number, a bank account, or has an asset, list it on your records. And then go check how many of them are still viable. Have they already been canceled? Have they been dissolved? Have you told the Secretary of State that? Have you filed the appropriate paperwork? Because for everything that is still living and breathing in the cyber world of corporations, i.e. there's not a document that says it's been dissolved, it needs to report. Don't overlook any of your entities that you are like, oh, I forgot all about that. And I've got a couple like that. I've got to go back and I've got to go check to see if I've got a couple of entities that are still in existence or not. Because they don't own anything, they don't have anything, etc. Greater usage of both personal property and title holding trusts. Learn how to use a trust. How am I changing my law practice? I'm only working with individuals that I know. I'm forming more LLCs in Ohio and fewer LLCs elsewhere. I'm raising my prices to accommodate the extra risks and responsibilities. And your plan of action. Identify every LLC, corporation, partnership, joint venture that you have an ownership interest or with which you have an affiliation. Determine if you have 25% or more ownership. Determine if you have substantial control over what that company does. Verify that each of those companies has its own taxpayer identification number. Every entity that has more than $1,000 or more of assets that it owns or controls must report in 2024. Make sure you've purchased identity theft insurance. If there's a screen, if there's a slide that you want to take a picture of, it's this one right here. If there's a screen, if there's a slide that you want to take a picture of, it's this one right here. All right? Now, I've got some more content that I want to share with you. Y'all ready for that? Understand who must report. Those are the owners of 25% or more of entities with $1,000 or more of assets. Those who have substantial control of an entity with $1,000 or more of assets. And you do not report what is owned by the entity, you report who owns the entity. So when it comes to reporting in 2024, timing is everything. For existing entities, do not do anything for the first 9 months because we don't want to run into this and so on. So, if you're like me, you're kind of wondering, how did we get here? How did we get to where in the land of the free and the home of the brave, we have these kind of things coming at us? And I'm going to walk you through how I think we got there. And y'all aren't going to like me. Okay? But we got a little pop quiz. How many of you recognize where this statement is from? All men are endowed by their Creator with certain unalienable rights, that among these are life, liberty, and the pursuit of happiness. Fundamental to that are personal property rights to be protected by government. That to secure these rights, governments are instituted among men, deriving their just powers from the consent of the governed. How many know what document that's from? Correct. Yes, sir. It's part of the Declaration of Independence. Preceded the Constitution by 20 years. So here's my pop quiz. Because, by the way, I set you up. Deriving their just powers from the consent of the governed. Here's my pop quiz. Number 1, are you registered to vote? Are you registered to vote? Pop quiz number 2, do you know the name of your congressional representative? Pop quiz number 3, do you know the names of both of your 2 U.S. senators? I will give you the answers for if you're in the state of Ohio. We have Senator Sherrod Rotten Brown, and we have Senator J.D. Vance. And by the way, Senator Brown is up for re-election, and he needs to be sent home. That man is taking more of your rights and liberties than you can imagine. And you know what? I do not care that his wife is from my hometown. It don't matter to me. Now, pop quiz number 3. Have you reached out to 2 of those 3 individuals in the last year regarding housing policy or real estate investing? My congressman is David Joyce. He knows my face. Senator J.D. Vance knows my face. Senator Sherrod Brown will not meet with me. His staffers will, but he won't. Okay? Have you reached out to 2 out of the 3 of them in the last year regarding housing policy or real estate investing? Here's the next one. Have you ever contributed to any congressional campaigns, House or Senate? Because I'm going to tell you, you know what I find? Most real estate investors think that political activity is reposting a meme on social media, retweeting something on X. That is not it. If you don't know how to get in their face and have a conversation with them, not their staffers, but with them, you're not active. And it boggles my mind, but I have done this quiz across America now, and I find less than 1% of investors can pass this quiz. Have you ever contributed to any congressional campaigns, House or Senate? And here's question number 6. Which is more important, protecting your right to invest in and own real estate, or weekly dropping $75 on pizza and movie tickets? And you're like, well, Jeff, what's $75 got to do with it? You know what? I'm going to tell you a story of what that's got to do with it. How many of you remember 2.5 years ago when the Build Back Better bill was pending before the United States Congress? How many of you remember that? How many remember that contained within the Build Back Better bill were 2 sections that would have decimated the self-directed IRA industry? Does anybody remember that? Do you remember using a website called Hands Off My IRA, created by my good friend, Ohio attorney John Heyer? So fast forward, investors across the United States used that website. We had targeted 8 specific members of Congress. They were all Democrats. We targeted 8 of them, and we kept contacting them, phone calls, emails, faxes, letters to their district offices. And finally, I got to D.C. and I had meetings with 3 of those 8. Now, the way I got those meetings was really simple. These were private fundraisers. Means that they occurred off of Capitol Hill, in private space, cup of coffee at a Starbucks, something like that, and for an envelope with $5,000 of campaign contributions to 2 of these 3 men, that bill got killed. What was in there? About $5,000 in each envelope in campaign contributions. Completely legal, completely legit, but it was $5,000 that bought me 25 minutes of FaceTime with Henry Cuellar, Democrat out of Texas, Vicente Gonzalez, Democrat out of Texas, and they went and petitioned their buddy Josh Gottheimer, Democrat out of New Jersey, and the 3 of them said, we're pulling it out of the bill. And one of them, it was Gonzalez, looked at me and said, Jeff, if we agree to take this out, will the phone calls please stop? And I said, yes, they will, Vicente. And he said, great, I'll see you at an event in 2 weeks, and I'll speak with you on stage in front of a group of investors. And he did. And he explained how the process worked. Now you're going to be like, well, Jeff, that's a great story, but what's 75 bucks got to do with it? 75 bucks a week adds up to what? $300 a month? $300 a month times 12? A little over $3,000? That was half of what it took from a bunch of individuals to get the job done. But we are so busy spending money on our car leases and on our pizza and our beer and our everything else that we don't put any money aside for political activity and political engagement. I find very few businesses, even large-scale businesses with multi-million-dollar revenue, that have decided to set aside a portion of their business earnings for political engagement and activity. And I'm going to tell you, if you want to own millions of dollars of residential real estate, if you even want to own hundreds of thousands of dollars of residential real estate, and you want to own it, and you want to manage it, and you want to grow it, and you want to have cash flow off of it, if you're not planning on protecting it from city council, from the county government, from the state government, and the federal government, you're fighting an uphill battle. Now, you may have remembered at the beginning of the presentation I talked about how the first time I changed national housing policy was kind of a self-preservation thing. Freddie Mac and Fannie Mae came out with an underwriting bulletin that said the way I was doing short sales and teaching it across the United States was not acceptable in their eyes. And they thought that anybody who did a short sale the way I was teaching it shouldn't be allowed to resell that property for 180 days or more. So we got to work. We hired a lobbyist, and we lobbied. And we went to D.C., had multiple meetings, many meetings. And we finally got to where the chairman of the House, of the Congressional Committee that had oversight over Freddie Mac and Fannie Mae, their staffer and I sat down and we wrote the language that now appears in every foreclosure deed coming from Freddie Mac and Fannie Mae and every short sale approval letter that says you can't resell it for 30 days. On day 31, you can resell for a 20% profit, and after 90 days, sky's the limit. Okay? So that's what we had to do. Now, I've already done this fight multiple times, but I'm just getting warmed up. I'm just getting warmed up. I make a lot of trips to Washington, D.C. I know my way around pretty much all of the 3 Senate buildings and the 3 Congressional House office buildings. I'm pretty good there. But you know what I don't have, and I need your help with? I need your help with when I want somebody to, from the comfort of their own home, send an email. I need that help. So let me ask you, and I'm going to just change it to you like this. Do you want to have to rent your properties out on a first-come, first-served basis? Do you want to be forced to accept anybody that applies to rent, irrespective of how they're paying, what their credit score is, what their employment history is, and what their criminal record is? Okay. Are you comfortable not being able to screen away prospective tenants for violent felonies and drug activity? I'm not. Do you want to be forced to accept Section 8 on all of your properties? Some of them I love it. Some of them I don't. Okay? So this is your opposition. We've got a group called tenants unions. One of the most powerful ones is KC Tenants Power in Kansas City, Kansas. Once again, they keep showing up. They led the largest grassroots field operation in the history of Missouri. They knocked on 23,000 plus doors and mailed over 55,000 households. Why? Because they're trying to get those laws passed to where landlords can't screen. They made over 9,000 phone calls and sent over 61,000 text messages. They trained over 277 volunteers into their program. They stopped 919 evictions during the pandemic. They closed the court for weeks in 2021. They shaped city council elections in 2019 and 2023. This is in Kansas City, Kansas. and in Kansas City, Missouri. They fight on both sides of the river there. Are we doing that in Toledo, Ohio? Are we doing that in Columbus, Ohio? We've got resources, they don't. These are usually broke people, but they care. In 2022, they blocked a $10.5 million tax incentive from a landlord to build 385 units. 20% would have been affordable housing. They forced it to all be affordable housing. They've perfected their processes, and now they're going to other cities. We went head-to-head with them earlier this year in Kansas City. They had 4 things on the ballot in front of City Council. And Anna, I'm happy to tell you, we knocked out 3 of the 4. Kim Tucker, valiant fight. Michelle Winbury, valiant fighter. Her husband Brian was there. Rich Pecor of Rent Perfect, which, by the way, if you don't use Rent Perfect, I do not know what's wrong with you. It's a national RIA thing that's available to everybody here. Valiant fighter. We showed up with about 125 people that emailed the living daylights out of those members of City Council, and we stopped 3 out of the 4. They're growing like wildfire, and here's why. They want to build their base, and they use a very persuasive indoctrination. Do you know what their chant is? I know I'm online, I got to be careful. Their chant is this: the rent's too damn expensive. Rent's too damn high. They have no idea what property taxes are. They have no idea what maintenance costs are. They have no idea what insurance costs. It's just too expensive. That's all they say. You own a house, you must be rich. They make their members feel seen and heard. Okay? They show up. They are not afraid to be disruptive. So, y'all, does that make y'all feel good? So, you going to put your houses up for sale? Or do you want to stay and fight? If you want to stay and fight, then I'm going to ask you to do one simple thing. Become aware, get engaged, and become a hero. What is a hero? A hero is an honest, educated, responsible owner. What is a hero in my opinion? A hero in my opinion is a landlord that when they receive an action email, they open the email, they read it, they copy and paste the suggested language, they personalize it, they send it to the suggested email addresses that they're provided, and they get it done. It takes about 15 minutes. Their hot cocoa hasn't gotten too cold yet. They haven't even had to slip out of their slippers and comfy pajamas. And they can do it from their iPad, laptop, desktop, or maybe even their iPhone. But what they did is they took action. I don't need you to go to Washington, D.C. I don't even need you to go to Columbus, Ohio. I just need you to, when I send you an email asking you to contact your members of Congress, that you do it. If that's something that interests you, then scan that QR code and sign up. I've got about 300 people across the nation that do that. This is my #1 priority going forward. I am going to do one thing as long as I can, and that is I'm going to fight rent control, and I'm going to fight these tenants unions. I own a lot of rental properties. I love working with blue-collar, lower middle class, single working parents. Those are the people I'd love renting to because I want to give them a safe, affordable place to rent. But these tenant unions will put me out of business. These tenant unions will make it to where I can't do it. Now, I'm going to tell you 2 things. It doesn't cost you anything to join this, but it will take some time. Every now and then, I'm going to ask you to do something. Sometimes I'm just going to send you an email to inform you what's going on. Just get an update. That's it. Your information is never going to be sold, swapped, or shared with any other party. I don't do list swaps. I don't do shares. I don't do anything else. This is, I need a group of people that when I say sick 'em, they go get it. And I make it easy for you. I give you exactly what to write. I need you to personalize it. So it means I need you to put your name in it, your address, your business, what city, where do you own a house, and so on. See, I don't want you to send an email saying, hey, I'm a landlord in Ashtabula County, Ohio, when you send it to Sherrod Brown. I need you to say I'm a landlord in Toledo, Ohio, because you're in Toledo, Ohio. Don't use my stuff, use your stuff, okay? All right, now, this is the fun part. Questions on anything I've covered, and only on stuff I've covered. All the way in the back, Mr. Hamilton, sir, you need a microphone. We're recording this. I have no idea if I'm in the camera or outside of the camera, but anyhow, here I am.
Okay, just to be clear, on the trusts, does that impact the same, does that also impact land trusts?
Yes, unless there is no corporation or LLC involved with that land trust.
So if it's just a land trust, not
With a-
associated with an LLC, you're okay?
If it's a land trust, and I don't even like that term because that's a bad term, but if it's a grantor revocable title holding trust formed by a human being, another human being is the trustee, and all beneficiaries are human beings, it does not need to report. But it does not give you any asset protection whatsoever.
Okay, second is, I assume this CTA was passed by Congress?
Yes. It was passed by Congress when Joe Biden was president, Chuck Schumer was in charge of the U.S. Senate, and Nancy Pelosi was in charge of the House.
I have a client who, as an LLC, has passed away, and his dad's asking what he needs to do. There are no heirs or anything like that.
What are the assets within the LLC?
A property that he's selling right now.
Does the operating agreement for the LLC have a transfer on death provision as Ohio law permits?
No.
Okay. Who owns the LLC now? Because if the LLC owns the house, who has the authority to sign for the LLC?
They've already deeded it out of the LLC into the father's name,
Dissolve the LLC and do nothing further and you're fine.
and you do that online at SOS.
You can do that online.
Thank you.
And if you can't do it online, there's a form you can get online and then file it through the mail. You guys are control freaks over this microphone.
Yeah, I noticed. So I was looking on Frank LaRose's website, okay, and you mentioned something earlier about those who have substantial control, kind of alluding to wives and such, single member LLC. The question I have is, since single member, I know I'm going to have to register eventually myself after September anyway. Am I going to be looking to register her separate so there'd be two registrations, or is it only just one and I'm listing two names? How does that work? What do we know so far?
That is a good question. If it's been a single-member LLC, always been a single-member LLC, and you can prove that she's never made any material decisions in the LLC other than telling you what to do,
Yeah.
then you don't need to register her name. But if she's had any influence whatsoever, if her
I
name's
mean, we
ever-
file our taxes together, so I don't
I
think-
understand, I understand. Is it a disregarded pass-through LLC, or is it taxed as a sub-S?
Not taxed as a sub-S.
Okay. If you want to be really paranoid, you register both of them as
Okay.
having substantial control. If you're otherwise, just yourself,
Okay,
okay?
thanks.
Yep. But if she's ever used any of that income, or if she's ever made any decisions, or if she's ever held a debit card or a credit card in the name of that LLC, register her.
Yeah, so you said register both.
Yep.
Okay.
I came up here first. Real quick, nonprofits,
As in 501c3 status, they are
Or-
exempt from
or
reporting.
6.
They are exempt from reporting.
Okay, how about 6?
Don't know.
Okay.
Don't knows are easy answers for me.
Thank you. Schedule C, I'm sorry, a sole proprietor, so they have a TIN. You
Sole
have to-
proprietor has a TIN.
you have-
Yes.
You have to file.
They don't have an entity.
What do you mean they don't have an entity?
They're a sole proprietor.
Okay, but
They're
it's,
not, they're, unless, now are you saying that as a sole proprietor means that you're self-employed and as a human being?
Yeah.
And you're not doing business in the name of a company? See, if you're a single-member disregarded LLC with a TIN that reports on a Schedule C, you have to report that.
this is a sole proprietor
Uh-huh.
business that has a TIN that,
We're going to teach you something.
okay,
A sole proprietor is a human being. A disregarded entity is an LLC. They both can have TINs, they both file on a Schedule C.
okay,
One of them has to report, the other one doesn't, because the other one is a human being, not an entity. The entity, if there's the name of an LLC registered with the Secretary of State that that TIN is associated with, it needs to report.
okay.
Sole proprietor means human being.
Well, but it's a business name.
I understand. So they're either doing it as a DBA.
Right,
A DBA is a fictitious entity that doesn't really exist. It's a trade name.
right.
So it does, there's no TIN associated with a DBA. The TIN goes back to the human being,
Okay.
okay?
So you're saying I do not have to file?
If you're only using it as a DBA, correct. If you've not filed an Articles of Organization with the Secretary of State, you don't have to file.
Cool. Good to
Okay.
know. Thanks.
Yeah, words mean things, and that's why I'm drilling down. Yeah. We got all over the place. I think you should just stand in one spot and make them come to you.
I like that idea. Get in line.
So forgotten entities. I have a-
Forgotten entities, yes.
Yes, that I have one that's still open, 33%, it's less than $1,000 in assets in it. Do I still have to register that?
If you're confident that it has less than $1,000 of assets, I would do this. I would transfer whatever's left in it,
Okay,
the nickel and dimes,
right,
out of it and shut it down and dissolve it.
got it. Cool,
And then you don't have to worry about reporting it.
thank you.
Up on camera, I guess, huh? Okay.
Camera.
That's fine.
time.
Your moment in fame, man.
So I recently started an LLC, and I signed up for it with a company that looked like it was an official government website, but it was just somebody, it was like a third-party one that took a little bit more of my money and then filed for the LLC as well as the EIN number. Now, do I have to report that company to the FinCEN, or does that just not matter
Did you do that in 24 or 23?
after 24?
They need, if they did not do the filing for you with FinCEN,
No, I didn't pay, I could have paid for them to do that, but I've already did it with my other LLC that was
Okay.
filed before, so I wanted to do my
they
own.
need to report that they were the applicant that formed that LLC for you. You don't have to report that, they should. You need to still report your entity with FinCEN, even though, because you're the owner of it and you have
So I
control
don't
of
need
it.
to, I don't need to say this company filed the paperwork for me, I just
Yep.
filed, like I applied on the state website?
Yes,
Okay.
yep, yep, like you did it.
So I have an online coaching business where I coach other people to start their business, like online coaches and consultants. So in the course of that coaching, I might suggest to someone that they start an LLC. So what constitutes as helping someone form an LLC? Does that constitute, or do I have to be involved in the actual filing? Or?
You have to be involved in the actual filing.
Okay.
You have to be involved in the actual preparation and submission of the Articles of Organization.
Okay.
But in your online coaching business, I would suggest that you change it to this, that they consult with their own attorney or accountant about forming an LLC, so that you're not giving tax, legal, or business advice,
Good point.
okay?
Thank you.
Yep. Just say, I think you should talk to an attorney about forming an LLC. Yeah.
Come
That
on
keeps
up.
you safe. That
Don't
keeps
be
you
shy.
safe. Don't be shy, folks. As you can see, everybody has successfully survived asking a question. And no one has fainted. Mr. Hamilton walking all the way to the front of the room.
We're going to get you on camera.
I've got clients watching, I can't wait. this is opinion, do you think that they're going to go after, this is a land trust, do you think they're going to eventually go after land trust too?
I don't think I know because they've already got the rule and proposed rulemaking status.
Okay, yeah, because I've got clients who have land trusts for the anonymity, so that's basically going to be destroyed.
Yeah. Yeah. Well, that depends upon if you believe the government propaganda or not. I'm sorry. You believe the government website or not. Because it's supposedly only available to law enforcement.
Yeah. If the data's there, it's going to get misused.
Exactly.
Yeah.
Exactly. If the data's there, somebody's going to get it.
Okay, so basically, if you get a land trust, get ready.
So if you have a land trust or if you're thinking that's going to be your solution, get ready because those rules are going to come into effect sometime next year. Unless we see a significant political change in Washington, D.C.
Is it, well, it's all speculation as to whether or not this even gets overturned.
Well, let me put it this way. The proposed rulemaking for trusts won't probably become effective in '24. And so if a different administration or if there's a clear majority in the House of Representatives or a change in the Senate, they're going to get rid of it. I've had a number of Republican members of the Financial Services Committee tell me they had no ability to get rid of it or stop it. If they get a chance, they'll get rid of it.
And then hopefully destroy the data, but that may not happen.
But it's already going to be in the hands of whoever hacked it and leaked it. You know that. Government never gives back anything it gets.
Right, okay.
Okay, so I wondered a couple of things. I thought 2 states were fighting it, not just Alabama. Do you know if any other states are doing a lawsuit against it?
I am not aware of any other pending litigation at this time. I know that Mississippi Secretary of State's going after it. I know that Senator Tuberville of Alabama is complaining about it, but I don't know of any other cases right now.
Okay, and the thing that actually really worries me a lot is that you have, like I work out of my house, so I have to have my home address on there.
Yes.
Can I put my mom's address, or, I mean, if, you have to absolutely put your address?
You
How do
have
they
to
know?
put, if you don't put your address.
Who wants, I can't
I mean,
put it on anybody else.
it's got to match your passport or your driver's license.
Oh, I see. Okay. So we have to have,
Surprise!
so we have to have a driver's license for this?
Yes.
But not to vote?
Correct.
Okay, got it.
That's because you're privileged and you own a business. Remember that.
That's a privilege.
Yeah. Along those lines, can you add anything to where you think these lawsuits might be going? And like you said, you mentioned a couple that might be coming on board, or we just got to cure this with our vote?
So, Anna, that is a really good question. The elections that happened this fall, whoever's elected will not take office until January when the deadline's up. So absent more lawsuits between now and the end of the year saying that the Corporate Transparency Act is unconstitutional, we need to comply with it or we're taking the risk of being a felon and being fined. So that's why I'm saying procrastinate until October, but not beyond October. I'm trying to thread a needle on a moving target.
So once you're a felon, you can't vote.
Once you're a
done.
felon, you can't vote, you can't
You're
own a
done.
firearm, and you can't do a bunch of other things. Yeah, vote. Did you? Have you been convicted? Okay. All right. Then somebody gave you back your voting rights. Yeah. Yes, ma'am.
I just wanted to ask about the address because I'm one of those people who just formed my LLC this year.
Yes, ma'am.
So I have 90 days.
Yes.
But I was told I can use the virtual address, so I went out and got the virtual address.
Whoever told you that, he did not read the law and did not read it correctly. You have to give a physical street address of where the business actually operates.
All right. Well, this is what's going to happen. They accepted it.
Who's they? Secretary of State or FinCEN?
The Secretary of State has the application.
Yes.
And on the application, it says they will accept the physical address of
When I file, I can use a post office box with the Secretary of State at filing here, okay? But I cannot use that with FinCEN. FinCEN wants the physical street address. The statute's very clear. The rules interpreting it are very, very clear. Single moms with businesses at home, they don't care. Yeah, so sorry.
So if I was in a company and I am no longer in the company in 2024, as of like weeks ago, I don't have to worry about filing in that company? Or do I still have to be concerned with that?
Okay, so that's a really good question. So you were an owner of the company on January 1st of this year.
Correct.
Did the company have assets in excess of $1,000?
Yes.
It has 1 year to file its initial report.
Okay.
The key word there being initial.
Gotcha. Okay.
So when it files the initial report, at the time it reports, it needs to identify who are the owners. Who are 25% or more owners at the time it files its initial report, and who has substantial control. So if you have clear, executed transactional paperwork
I do.
that says you don't own it anymore and you're out, then you're fine. If you don't have that paperwork, you got a problem.
Okay.
Go get it, or you need to report.
Got it.
Okay?
And then as far as the felony thing, if you have to be convicted, or you just automatic, okay, on day.
Oh, you have to be arrested, charged,
Oh, okay,
convicted,
okay,
the whole
so
thing.
it's-
Oh,
so
yeah.
You're flying until then.
You're,
I mean,
well,
well, you don't want to really
you
risk
don't,
that, but.
who wants to go down that fight? I
Right,
don't,
right,
yeah.
right, right,
Yep.
gotcha. Okay.
Okay?
Thank you.
Yep. All right. Who's happy?
I am. I got to come and listen to you.
You're very kind. So I'm going to wrap it up with this. Groups like this are absolutely essential for 3 reasons. You know what's going on locally, you know what's going on statewide, and you can learn what's going on nationally. So don't be a loner, don't be a lone wolf, don't be a cockroach, be an eagle. Flock together, work together, and do things together. And stay active and involved in this group. Peace. Watson out.